Ladies and gentlemen, welcome back to the channel. Today is a Saturday. That means markets are not open. We do have some news I want to share with you, and generally we're going to talk about this market, what I think is coming, why I'm bullish on stocks at this point. Keep it pretty clean, concise, straight to the point. If you appreciate that, hit the like button as well as subscribe to the channel and check out that link down below in the description of today's episode. If you guys want to come join the trading community, come trade and invest with us. If not, buckle up and let's get started. Now, let's talk about what has really been affecting the markets recently. And unless you've been living under a rock, you know exactly what is affecting the markets. What has been affecting the markets is the government shutdown, the worry around the economy. See, on Friday, we were supposed to get the jobs report. We did not get the jobs report because the government is shut down. We were expecting a negative 60,000 jobs print for last month. That's a really bad number we were expecting, okay? And you know, if we don't have the economic data, if we don't get the jobs number, all we have are the estimates to go off of. So Wall Street's looking at this market like, hey, we just lost 60,000 jobs in the last month, and they're selling small caps. They're getting bearish, okay? This has been happening for over a month. We were early to identify this as a problem, as the causation of this market's weakness, okay? We started talking about this about 2 or 3 weeks ago, after the first week or so of that being the main driving factor of stocks. We identified it and started discussing it on this channel. So we were very early to identify the root cause of the problem here. Okay, now on Friday, it was reported Trump told the Senate, Republicans and Democrats that they cannot leave until they get the government, crisis, the government funded again, okay? And, well, we haven't heard anything specifically about that. It's not like the government is open at the time of recording this video. But that was the prevailing narrative into the end of the day on Friday, and that's why small cap stocks recovered. Small caps were up 0.52%. That is the IWM. The IWM was also up 0.25% in after hours. So Wall Street is saying, hey, the government is about to reopen soon, and, the recent selling in markets, well, you're getting that offset with the government reopening and a positive catalyst to come. Now, again, at the time of recording this video, we don't have any conclusion to the government shutdown, but I think Wall Street is saying, hey, look, Wall Street is so negative on this economy. They're convinced that a recession is upon us. And when the government reopens, there's a good chance that the economy is going to start showing us, or the economic data is going to start showing us, that the economy is not as weak as a lot of people were thinking, okay? People, again, they're full-blown, like, recession, panic, and odds are, let's face it, on Friday, the jobs report was probably not going to come in at negative 60,000 jobs. The jobs report probably was going to be negative 10, 12, 20,000, something like that. But it probably was not going to be worse than negative 60,000. So the bar for bad, news is way up here. We're probably going to get something that's like right here. Not like super great like down here, but probably not as bad as feared by investors today. And that's why stocks recovered, because once we open the government, then we're going to start getting all of those answers on how the economy is doing. Now, in the news today, Trump urges Republicans to blow up the filibuster amid shutdown talks. Trump claims that Democrats are cracking like dogs as he presses the GOP to end the filibuster. So basically, Trump is saying, hey, let's pull the nuclear option. It's called the NO. It stands for nuclear option. And this is to end the filibuster, okay? The Republicans can end the filibuster, and they can call for the government being reopened with a majority vote. Now, the problem with that from a political standpoint is the next time the Democrats have their way, they're going to pull the nuclear option as well. So basically, the party that controls the Senate, House, presidency is totally in control. If Republicans pull the nuclear option or to end the filibuster. So that's what a lot of Wall Street is thinking, that the filibuster will end over this weekend, and Republicans, if they need to, will open the government with a simple majority vote. And that is why stocks recovered in anticipation of the government reopening. Now, also in the news today, the FAA issues a ground stop for Chicago O'Hare due to staffing. The FAA issues a ground stop at John F. Kennedy Airport over staffing as well. This is really where the government shutdown starts to bite, okay? You can screw the poor people out of food stamps if you really want to. Okay, sorry, again, if you're easily offended, this is probably not the channel for you. But from a kind of political standpoint, from a public backlash perspective, ending travel is, that's a no-go, okay? Because then you start to get, people with more influence, people can't get from A to B. That becomes a major problem. Politically speaking, that's like a no-go. That's like crashing the stock market, right? That is a no-go because, people start to feel a lot of pain because of that. Now, Donald Trump says today, without our being able to use tariffs freely, openly, and in every way, we would suffer tremendously from a national security standpoint. Trump says that Senate Republicans should send government money given to healthcare insurance companies and send it directly to the people. Now, the CNN Fear and Greed Index to close out the markets on Friday came in at 21, which was in extreme fear territory. So, again, this probably doesn't need to be said, but Wall Street has been very bearish on markets, hence why you had the recovery on Friday, because the first sign of potential good news to come, and stocks started to do much better. Now, the market momentum is in fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in fear. And junk bond demand currently in extreme fear. If you look at the AI Investor Sentiment Survey, echoes largely the same thing. You have about 38% of investors that are bullish, 25.8% that are neutral, and 36.3% that are bearish. I don't exactly agree with the survey right now. I think if you're looking at different cohorts of the market, you're going to have drastically different opinions here. I think a lot of retail investors are really washed out. I think a lot of them have been margin called. I think a lot of them are down a lot in portfolios, and they are, to be honest, sick and tired of this market. They're sick and tired of the government. They're sick and tired of politics. And I echo that, and I know a lot of you guys do as well. Like, come on now. Wall Street is expecting, or was expecting on Friday, a negative 60,000 jobs report. Because the government isn't open, we just did not get that number. So we didn't get the number, so that's all we have to go off of. It was probably not that bad, and if it was worse than that, then we really have a bad situation on our hands. So at this point, we just want to get the government reopened. We want to know with certainty how things are and how things look at this point. And unfortunately, thus far for the past month, we have not had that information. Hence, government shutdown has lasted 38, 39 days now at this point. Who's keeping track? And yeah, that's roughly when the markets peaked. Okay, is when the government shutdown started. No surprise there, because we were heading into a government shutdown at a time in which the economy was already looking weak. Okay, so it's not like we started this government shutdown on a high note. We started this government shutdown with already, Wall Street pretty fearful. Keep that in mind. Now, the percent of stocks trading above their 50-day moving average coming in at about 38%. And that's at pretty low levels. That's at pretty, correction-like levels already. Now, the Fed rate monitor tool also has about a 62% chance of a Fed rate cut coming December 10th, 38.1% chance of no rate cut at all. And, this is still like pretty close considering Wall Street was expecting negative 60,000 jobs. You'd expect the odds of a rate cut at 100%. But, the Fed has made it clear they're not just willing to cut over and over again without certainty on how the economy is doing or how the inflation story is doing. Okay. So that's also a problem, since the last Fed meeting. Wall Street doesn't know what the Fed is going to do. Some Fed officials want to cut rates. Some are a little bit more nervous about cutting rates. And whole time, it looks like we have a negative 60,000 jobs number. No wonder, stocks have come under a lot of pressure recently. And this is what we've been talking about on the channel for a while now. But again, don't be surprised when the government reopens and the economic data starts to come in better than expected and we rally into the end of this year. That's my call. See, I think the government's going to reopen probably by Monday. I think there's a lot of pressure at this point via the stock market selling off recently, via the FAA shutting down air traffic to a certain extent. That's putting a lot of pressure on the government to reopen. And if Republicans have to use the nuclear option and just open the government with a majority vote, I think it's likely they do that by Monday or early in this upcoming week. And I think at that point, we're set up where maybe the economy is not great, maybe the labor market is not great, but it's probably not nearly as bad as most people think. Now, also in the news today, U.S. President Donald Trump has insinuated that he may recommend 50-year mortgages to the American public on Truth Social. So you can see here the 30-year mortgage from President Roosevelt, and then you can see the 50-year mortgage via President Trump. So yeah, kind of as a general here, general principle, I think that the economy is probably doing better than most people believe. And I think Wall Street is going to be positively surprised when the economy or when the government reopens and the economy shows that it's doing okay, that it's largely unchanged. Okay, we have Wall Street that is super bearish, that is running away with their own expectations, and there's been nothing to validate that or to really disprove that. So when you have estimates of 60,000 negative jobs, pretty recessionary numbers to say the least, and we just don't get the data coming out, it's no surprise why small caps and AI have sold off the way that they have. But when we get the government reopened and we start to see, oh my gosh, things are not nearly as bad as we thought, that's when the end of the year rally really kicks in full steam ahead. And that is my expectation throughout November into December. Keep in mind, November is historically the best month of the year for markets as well. And you're at such a negative point in, for stocks that it's going to be pretty hard to get more bearish from here, right? If you're already expecting a negative 60,000 jobs report on Friday, a couple days ago, you need something to come in even worse than that. And that's already pretty bad. So as far as a percentage basis, I think there's a much higher likelihood that things get better from here versus get worse. But again, that's just my expectation. That's my thoughts. That's how I'm dealing and processing this market and investing in this market. If you guys have a different opinion, check that link out down below in the description of this video. Come tell me all about it in the trading community, okay? And comment down below. Let me know, again, your thoughts on all of this. Have a great rest of your day, ladies and gentlemen, and I will see you in the next one.